Hey guys, so SoFi reported earnings earlier last week and the stock subsequently tanked as soon as that happened. I just want to give a quick overview and highlight of the different key points in the quarter and kind of give you my explanation on why I think the stock price fell, which I think is kind of consensus right now of why it fell, and if I think this is actually an opportunity or if this is some sort of warning sign that maybe there might be other problems with the company and you might want to pull out. So, with that being said, we're going to go ahead and start here. We're going to waste no time. So, adjusted net revenue came growing 41% year over year to a record 1.1 billion. This is great. This is what we want to continue seeing. Strong revenue growth, member growth, which I'd argue right now the most important thing I focus on personally is that member growth and product growth, because as they're acquiring more customers over decades and decades, with banking companies, the longer you are a member with a banking institution, the more likely you're going to spend more money with them. So I like to see them growing these members rapidly, up 35% to 14.7 million members. And the LTV, which is the lifetime value of these members, is going to go higher and higher as SoFi introduce more products, which we can see right here, product growth up 39%. But then also as just the members age. If you really think about it with how banking works, a lot of these members could be younger that they're acquiring, and they're kind of getting more of the new generation, maybe 19, 20 years old, younger 20s. If they start banking with SoFi now, they're more than likely going to go to them for, let's say, a car loan, credit card, let's run investing with maybe a mortgage years down the line. So it's really establishing that relationship right now, because long term they're going to be able to extract a lot of value from those members. So right now, just expanding that member base as rapidly as possible, which I like to see. They're up 35%, product growth up 39%. And we can see, so a year ago they're doing 771 million in revenue. Now they're doing 1.1 million and 71 million in actual net income, and now 166. So great growth. Doubled EPS on a year over year. Great to see. Next thing, this is more of going over the members and the products that I was just talking about right here, which is kind of always just very not interesting, not the right word. Impressive is a word I'd say, to see just the rapid growth, because 2022 they went from 5.2 million, 7.5, 10, and now up to 14. 13.6, and then now 14 as of Q1 2026, which we can see 44%, 34, 35, 35. This is just really strong growth, and I think this is just really effective marketing that they've done. I get a ton of SoFi ads. I've gotten a ton from the last 2 years. And then also just they genuinely do provide a better banking service than most institutions, and they do a better job advertising it. For example, the main thing that pulled me over to them is literally because of the savings rate. I was on my credit union, and my savings account there was an embarrassingly low percent, like maybe like not even 0.5%. It was probably like 0.10 or 0.20% was the interest I was getting paid on my savings. And I was looking, and then I'm like, so SoFi, if I set up direct deposit, I don't even need to put my full check in there. I send like $200 of my check, just a partial amount, into the savings. They're gonna give me, I think originally what I started out was like a 3.8% or something, somewhere around there, 3.6, somewhere around there for the APY. So I did that, and then slowly I'm like, oh, let me move like maybe a couple thousand here from my savings paying nothing into there, because at least let me earn something. And then it got to a certain point where now my old bank account has barely any. I think I have like $1,000 left in it, in my old savings, and almost pretty much all my savings is with SoFi now, just because I'm getting that higher APY, and then also they recently had an offer, which they've mentioned a couple of times on the press release I remember seeing, but they had an offer running where if you signed up for SoFi Plus, you got your APY went from, I think, 3.5% to 4.5, which I did because I was like running the numbers. I'm like, okay, it costs $10 a month for SoFi Plus, and I was looking. I'm like, okay, with this amount invested, how much am I going to make yearly? I'm like, oh, it makes more sense to do that. I'm going to make more on the interest than it costs me for that upgrade. And that's not even including all the other benefits and perks you get just from being a SoFi Plus member and different discounts and stuff they had. Like my TurboTax, I got a discount because of that whenever I was doing my taxes. So just great synergies all around, and just great job just acquiring new members and introducing new products. And yeah, like I said, even for me, I didn't think I'd sign up for SoFi Plus, but that they gave me an offer I couldn't refuse, and it just amazing job. And I think if they continue down that path, this member growth is just going to continue to accelerate and accelerate. Now over here, we can see the main thing I wanted to touch on this slide that I brought in is the adjusted net revenue growth. So that 30% CAGR from 25 to 2028, which I think is definitely possible. If anything, I think they could probably hit higher than this. I honestly, I think they could probably hit like a 33 to 35%. But of course, that also depends on some more macroeconomic things. If we go into a recessionary time, that could definitely slow down their growth. So you always got to factor that in, especially with banking plays that are more, companies like this are more affected by the macro than maybe some other companies could be. But regardless, I think this is very realistic for them to hit, especially with that member growth. I honestly think it could be a little faster, but that would have them going from a estimated 2026 4.6 of adjusted net revenue, 4.6 billion, to 7.8, which would be crazy. Now, for the adjusted earnings per share, 38 to 42% CAGR. Pretty crazy on that one as well. 102 to 112 is what they're forecasting out currently. So definitely some great growth there, and just positive signs all around right there. And here is where the issue came in. So if you're still here and you're wondering, okay, all of that sounds great, why is the stock then plummeting? What's the reason of it? Which you're right. Those numbers were all pretty great. I will say there was some weakness in the technology sector, but in terms of the rest of the core business, that's also such a small revenue side compared to the financial and the lending side. So regardless, what was the main thing? It was this. It was the fact that for guidance, it wasn't raised, because consistently in the past, SoFi's been not only beating their numbers, so they beat on revenue, they beat on their income, but then they raised guidance. They did not do that this time. They maintained the same guidance that they had last quarter, which the market did not like because they're taking it as a sign of weakness. But really, sometimes you just gotta zoom out, get out of the head of what other people are thinking and other people's expectations on the growth rate, and just zoom out for a bit. The company's trading at a forward PE of around like the 24-25 range. The revenue growth is 30% year over year. Net income growth, they're expecting 72% year over year. And EPS, they're expecting growth of 54% year over year. Now, factor this in as well. It's not like the stock is high flying in valuation. It's already been trading down from when it was at its higher peak back in the $30 range. It's cut in half from that. Then also factor in that originally this guidance that they are maintaining, they originally had that forecast in, but with the expectation of 2 rate cuts coming, the Fed doing 2 rate cuts. Now the consensus is there's going to be no rate cuts. So although it's not a raise, putting that in quotes, it's almost a pseudo raise, because the conditions are worse, but they're still expecting the same amount of growth. In my opinion, that's still almost the same thing as just a guidance raise. The macro conditions worsened, but they're still able to maintain their already strong outlook they had before. I think that's a win. And honestly, I still think they could beat these numbers. I think honestly with that, management is my personal opinion from what I got from that. I think management is being more cautious because now they're expecting no rate cuts, so they don't want to raise this farther and potentially miss, because that would be horrible. But I still think there's a good chance they could still beat on this. And not only that, you got to factor in, what if the Fed does end up doing at least maybe 1 rate cut or something like that. So that's just something to keep in mind. My personal opinion, I think the stock price down move was way overblown. I don't think it's really focused on fundamentals. I think it's more headline driven right now. So I will continue to keep picking up, and I'm honestly a little glad that this happened. One thing I was worried about is because I want to grow my position larger. My position in SoFi was built more recent with the whole drop into like the 15 range, and that's when I started building my position. And my position's built pretty decent. Like it's a pretty decent sized position, but I still want to grow it quite a bit more. And one of the things I was worrying about going into earnings is I thought there was potential of them smashing, and then the stock price was back into the mid 20s range. At which case, it wouldn't be as attractive for me to add. I could still probably add some, but it wouldn't be as attractive. But with this, the downturn, and then I see the numbers are still really good, but the market's still pulling back. This is just giving me more time to just consistently invest and up my shares more and more. So that's what I'm going to continue to do for the coming months. I'm going to continue to add to my position till I feel comfortable with my exposure to it. And I recommend always all of y'all do your own research on this. Again, this could be heavily influenced by macro factors, but this is my opinion on what I'm thinking going forward with my portfolio. Now, earlier today, I did have a video going over Meta's earnings. That's actually my largest holding. So if you want to see that, I'll throw that up. As well, I did do a video on Zeta Global, which is an AI data marketing company. Company reminds me a lot of Palantir in 2022, which is a stock I was invested in as well. And I'm seeing a lot of similarities, especially with their generative AI model, Athena, with how Palantir was with AIP. So if you're at all interested in that as well, go ahead and check out that video because they had really strong earnings. The earnings on that one was actually very, very strong. And I had a video where I kind of went over my bullish thesis on it as well. Excuse me. But with that, I think I'm going to end off this video. And please, if there's any other earnings y'all want me to look at, or even any companies to do a dive in, maybe some investor presentations, I'm always open to ideas. I'm always looking for new stocks where I can see and I can do a dive into it and see if maybe there's something interesting there. So thank you.